welcome everyone. Investing in equity markets can create wealth in the long term, and equity mutual funds are a good way to participate in this process. But the past few months, we have seen that markets have been extremely volatile. Various micro and macroeconomic factors can affect the market seasons, as we like to call it. At a time like this, how does one go about investing in the equity markets? What kind of investments may be viable in such market conditions? I am Siddharth Singh, and discuss all this and more, we have with us Mr. Sanjay Chawla, who is the Chief Investment Officer Equity of Baroda BNP Paribas Asset Management India. Welcome, Sanjay.
Thank you, Siddharth, for having me on this show.
If you have any questions for us or Sanjay, you can write those in the comments section below or tweet to us. The details are on your screen right now. We will seek Sanjay's responses to those questions and share them with you. So first up, Sanjay, what do you make of the current equity markets?
It's a very interesting question, and we are at very interesting times. Equity markets create wealth over long term, but for that we have to stay content with volatility in the short term. There are times when, due to certain factors, market come down, but they seldom stay for long term. In the current year, the geopolitical events, unprecedented rise in inflation, rate hike, and recession fears have led to volatility in the stock market worldwide. If you look at S&P 500 in the current financial year, current fiscal year 2022, they're down by about 21%, and they're the worst start in the year in the current year since 1970. Indian markets have been somewhat more resilient, having fallen by anything between 10 to 15% nonetheless. While there is some impact of high commodity prices, our high frequency indicators continue to indicate robust economic growth. Over the last year, markets have fallen around 15%, whereas corporate earnings have risen by about 20%. Thus, effective valuation have corrected by around 35%. We believe investors could do well to invest in equities with a time horizon of 3 to 5 years.
Well, in that case, how should investors invest in such a market scenario?
So, Siddharth, there are three mantras that I live by for wealth creation. Number one, make use of market volatility. Markets may come down on a bad headline, but they do not stay down forever. For a long-term investors, there are opportunities to accumulate equities and create long-term wealth. Second, decide your asset allocation and stay on course. Do not pay attention to day-to-day price movement. 3, research about your investment solution that can help you stay on course on your investment journey. I believe Flexi Cap funds are one good way to navigate the changing market scenarios.
Talking about Flexi Cap funds, could you tell us a little bit more about them?
So Flexi Cap funds invest in companies across market caps, which is large cap, mid cap, and small cap. These funds have the ability to dynamically allocate the portfolio depending upon the prevailing market conditions, valuations, and future growth prospects. Post the regulatory guidelines, Flexi Cap category is the only one where investment manager can truly express their views on the market by way of fund positioning.
All right. So, if you were to list down the benefits of investing in a Flexi Cap fund, what would they be?
So, Siddharth, to my mind, there are 5 positive factors that I would really talk about. Factor number 1, agility. No market cap limit allows the Flexi Cap fund at any given time to dynamically take position across large, mid or small cap. Secondly, diversification. One equity fund which invests in different market segment. Large cap tends to reduce the volatility, whereas mid and small cap may come with higher growth potential. Third, managing risk. A diversified portfolio helps in reducing risk associated with investing solely with large, mid and small cap, and hence it's a good starting point for someone who's new to investing. Fourth, it's an all-season fund. Given the dynamic nature of the fund, It may adapt and thrive in different market cycles. Finally, it is one of the largest equity category by AUM, which means a lot of investors have shown faith in it.
So, as you know, we are in the midst of the new fund offer for the Baroda BNP Paribas Flexi Cap Fund. So, would you tell us a little bit more about this particular fund?
So, Baroda BNP Paribas Flexi Cap Fund is an open-ended dynamic equity fund investing across large cap, mid cap, and small cap companies with no limits on market cap allocation. The scheme is also diversified across sectors and stocks.
Okay, Sanjay. So, given that I believe that there is a whole array of companies that you can invest from, so what would be the investment philosophy and the investment approach of the Baroda BNP Paribas Flexi Cap Fund?
So, in Baroda BNP AMC, we have a well-defined investment approach, and we follow that and use that as a Bible. Similarly, for a Baroda BNP Paribas Flexi Cap Fund, we've designed an investment strategy which has a three-step process. The three steps are: one, we have a step number one, which is a top-down approach for allocation towards the sector. Step number two is the horizontal allocation towards choosing how much should be the allocation to the various market caps. And the third one is the bottoms up or the stock selection. Our core belief, the core investment philosophy is the companies create wealth and not markets. Hence, we are always in search of companies with superior and sustainable growth. So, what are the pillars that we look at when we are looking at identifying these companies? We've identified three factors, and the principles of investment, what we call is the BMV principle. We look at businesses, we look at management and valuation. With this, we aim to invest in companies that have strong businesses and economic fundamentals, reputed management, and good long-term prospects while being available at a reasonable valuations.
Great. Given that the fund is flexible about investing in sectors and market caps, what would be the factors that would determine its allocation to sectors and market caps?
So, in our top-down approach, we would be looking at global macros and the domestic policies, policies by the government as well as by the central bankers. We would also be looking at other macro factors like GDP, IIP, CapEx, the credit growth, etc., to identify sectors which are growing better than the nominal GDP growth rate, and look at the valuation of that sector to determine what would be the allocation towards the sector out there.
Okay, great. So, coming to the particular themes in the fund, what are the kind of investment themes, sectors that you are looking to invest in the fund?
So, based on the current market condition, the way we've analyzed the overall macro, we will be running the fund with four key themes. One is the recovery theme. We believe that the present credit growth that is happening in the system is much better than what we have seen at the historical level for the last 2.5 years. The NPA cycle has peaked, and the valuation for the banking and the financial looks very attractive at this stage. So, that's one theme that we would be running. Second theme that we are looking at is the global commodities, and especially the soft commodities are coming down. Plus, the replacement demand for durables is coming into play. So, we believe staples as well as durables offer an interesting investment opportunity. In addition, auto and auto ancillaries can be an interesting play in light of the falling commodity prices and the semiconductor chip issue being resolved. Finally, healthcare segment, which is nothing but hospitals, can be a very interesting play post-COVID. Thirdly, we are looking at the CapEx cycle. The domestic CapEx cycle seems to be coming back, and we do believe construction sector as well as CapEx companies in a shorter cycle are the ones who should be benefiting. And finally, we have steady compounders like the pharma industry, which we believe can be an interesting play at this point for our Flexi Cap Fund.
So thank you, Sanjay, for giving us an overview of the Baroda BNP Paribas Flexi Cap Fund. Finally, one last question. What are the kind of investors who should look at investing in this fund?
So this fund is the ability to adapt itself to various market cycles, and we do believe that it is a fund for both seasoned investors as well as new investors. I would tend to also brand it as a fund for all seasons and for all reasons.
Thank you, Sanjay, for the insightful discussion.
Thank you for having me on your show, Siddharth.
Thank you all for joining us today. We will respond to your questions shortly, so watch the comment space for that. We hope today's discussion gave you a good understanding of the Baroda BNP Paribas Flexi Cap Fund and its relevance for equity investors. Do remember, the NFO closes on the 5th of August. Goodbye and have a great day.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.